Today's episode is all about me being sick and tired of people throwing away business receipts. Hey everybody, thanks for tuning in to the 5th episode of Ballin with Spauldin. I can't believe we're all in the 5th episode. Thank you guys so much for tuning in. I'm so grateful. I've been getting some great feedback from you guys. We've been answering questions. Last week's episode was all based on a question that we received over the last couple of weeks from multiple people. So thank you for that. Please leave your questions so that we can answer your questions in upcoming episodes. Share this with other people who are like-minded, who are just like you, who want to be a part of a wealth-building community. Leave comments, subscribe to the channel, and let's get into episode 5. Today we're talking all about, we got tax season coming around. We're going to be talking a little bit about taxes, and this is going to be a little bit more of a rant on my part because I am sick and tired of people throwing away their business receipts. I see it, and it makes me cringe. If we're going out to dinner and it has to do with business and we're all buying our own meals, I just cringe, man. That's a tax write-off you're throwing away. Why are you doing that? So, a lot of times too, I get some questions from people who are just starting out in a business or, have a part-time hobby business or what to do with their taxes and what's a write-off and what's not. And number one is get professional help. That person that you're going to pay that extra $50, $100, $250 to, it's going to be so worth it to make sure things are organized, to make sure things are done correctly. And you know what? It's actually going to most likely save you money because you're probably going to pay less in taxes because it's done right. So here's just a quick example, and this is how powerful it is. Last week talking about opportunity cost and deciding where your money goes. Well, making sure that you're organized comes tax season and it can save you a ton of money. You can then use that money instead of paying it all in taxes. You can use that difference that you're saving from an organized system towards an investment. Talk about opportunity cost. That's huge because now instead of sending out a ton more money, you get to keep it and invest it so that it can make you more money. So let's just take a look at this. We got an organized person and an unorganized person. And how taxes work, just a very brief overview for people who are brand new to this. If you have $100,000 of income, if the person that has no proof, all right, and what I mean over here is obviously this person had expenses, but if they just go back through the head and try to calculate it all up, if they don't have proof of that, for up to 7 years of the previous 7 years, if they're writing stuff off, they don't have proof, and the IRS comes knocking, you're going to get in trouble. You're going to either go to jail or you're going to have to pay a big penalty, but it's not going to be pretty, all right? So the person that's unorganized has zero proof. They make $100,000. Their taxable income, because they have nothing to write it off to reduce that taxable income, is going to be $100,000. Let's just say that tax rate is 25%. You're paying in $25,000. This second person, super organized. They keep all their expenses. They make $100,000. They have everything organized out month by month and in different categories, which you're going to get to in a little bit. And they have total business expenses worth $50,000. $100,000 minus the $50,000 expenses, taxable income of $50,000. Tax rate on that $50,000, not the 100, but the tax rate is applied to that $50,000. 25%, $12,500. And for those of you who are out there who have filed taxes before, man, I wish this is how the tax system worked right here. One page. This would be, if I'm running for president, right here, ladies and gentlemen. That's as simple as it gets. Right there. You're not going to have 40 pages if you're making $100,000. You're not going to have 40 to 100 pages. This is it. The Spauldin tax plan. I could be president in 2056 or something like that. Now, kind of backing into it just a little bit. Basic tax prep, okay? And so, once again, get that hired professional. I'm not an accountant. Get that professional help. But we got to get you an organized monthly system. And back in the day, people would just, write out a ledger and stuff like that in a notebook. Well, thank God we have technology. And what I really recommend is you get Quicken, QuickBooks. Excel can work for the very brand new person. What you can do is put in your income categories, your expense categories, and the dates and all that stuff and keep it real organized. But if you're not super talented with Excel, I would just recommend these. It's just going to be so much easier. But then really, you got to come up with categories. And this is something that, once again, that professional help is going to do. And you're going to have income categories eventually, you'll have expense categories for sure right off the bat, right out of the gates. Things like administration, office supplies, travel, continuing education, advertising, dining, promotions, events, shipping. Those are all, anything that has to do with your business can be a business write-off, guys. The pencil that you use while you're writing out your list of to-dos today for your business, it's a supply, it's for your business, it's a write-off. If you go out to eat with some of your team members and you're going to train them up over lunch, or you're recruiting a new client or a new teammate, that's a dining. Write it off, right? This is all going to go against the income you're making, and you'll have to pay a lesser amount of taxes. Here's the big boy. The one that really drives me nuts is mileage. There's so many people that are just driving around doing stuff for the business. They do not keep track of their mileage, and they're missing out on a big tax write-off. Every single mile you drive is 57.5 cents that you can write off. So if you drive 100 miles, you can write off $57 right there off that one trip. Last year I had 30,000 miles driven for my business. So when you do the math on that, that's over $15,000 that I can write off just because of mileage. And that's super powerful to not have to pay taxes on that $15,000. And the reason that you do this, the reason business owners have these advantages is because this is doing good for the economy. When I'm driving my car, I get that tax write-off because I'm buying gas. I'm paying the guy down the street that's a mechanic to keep my car maintained. I'm buying these office supplies, I'm buying from Office Max or Staples or Walmart. You know, when I travel, American Airlines really benefits from that. So the economy benefits from that. And because everyone's benefiting from that, you get to write these expenses off. So that's the basis of it. Very, very basic stuff, but it needs to be covered. And people that ask me, hey, you know, can you help me with this? Or what's your recommendation here? I'm going to tell them, go watch episode 5 of Ballin with Spauldin on YouTube and go from there and get some professional help, because by no means am I a professional at this. I just had to get this off my chest though, but it makes me feel a little better during tax season, writing that big check to Uncle Sam. So thank you guys very much for tuning in to the 5th episode of Ballin with Spauldin. Once again, please subscribe to the channel. It would just definitely make my day. I'm super grateful for all you guys that are fans of the show, and I look forward to hearing from you. I look forward to answering your questions in future episodes. I look forward to meeting you and having conversations over Twitter or text or Facebook, wherever. You can find me in a lot of places. Snapchat's right down there. That's becoming a favorite. And we will talk to you guys soon. Peace.